Hello traders, welcome to another daily analysis. Today is December 13th, Tuesday. We are right at 6:43 p.m. Eastern Standard Time. So there's really not much going on today. As mentioned, that the biggest headline this week is the Federal Reserve meeting and the decision, which is coming up tomorrow. So, everyone is waiting for that big event. So everything else is really highly disregarded, basically. And yesterday, the Asian session, we did have the Chinese data came out, was very positive, and that of course support Australian dollar and New Zealand dollar, and that was our trade call during the London session. Was we already said we're gonna buy dollar, CAD, and New Zealand dollar, but we add on Australian dollar, and Australian dollar was actually our the biggest currency to buy during the London session. The weak currency as for now is still Euro dollar, Swiss franc, and Japanese yen. So I know, it seems like I'm just repeating myself over and over again, but that's exactly what happened in the market. It's really right now, everything is kind of trendless, and you have to really wait for tomorrow to see exactly what's going to happen. So tomorrow, I would really suggest, if you have time, watch the press conferences. You can watch online on Bloomberg. It's free. You can watch for the press conference. You don't have to trade with it, but you can really learn a lot of things. You can watch the price action and watch the press conference and understand how traders, especially institutional traders, analyze this central bank policy statement. So another recent event came out today. London session was the CPI data from British pound, and it was expected to be positive, and that was the exact result. A lot of PPI, CPI all came out at the same time, and all the data were relatively positive across the board, and of course that supported British pound, and we actually got in a short Euro pound, and actually worked out. But unfortunately, it did not go too far, and then we got stopped out, during the New York session when I left my trading desk. And I'll tell you more about that later on. So, as mentioned, right now, a lot of movement are really random, right? Because you have traders from both sides who are looking to make some money. So you have people who want to buy dollar. Because of the Federal Reserve, they're expecting the rate to hike. But you also have people who are placing in short dollar, because even if the rate is hike, the US dollar is most likely going to retrace largely because of profit taking. And if the rate is not hike, if the rate is unchanged, then of course that's going to be very negative surprise. The US dollar is going to drop. So regardless of what's going to happen tomorrow, the US dollar has a more probability to drop than going up. But I'm only talking about the meeting. So I'm talking about an instant reaction during that first an hour or two. Afterwards, of course, the market will revert back to the fundamentals. But during the meeting, just understand that if the Fed raised the rate, then that's already expected. The price has already in, so you will actually see people taking profit. So you're gonna see US dollar drop. If the Federal Reserve does not hike the rate, then you actually become a very negative surprise. So you're gonna see people sell US dollar. So US dollar will be sold regardless tomorrow, most likely. Okay, I don't know for sure. That's just my past experience. So that's why US dollar will actually become a weak currency just by tomorrow. But fundamentally, it's still a very strong currency. So right now, if you ask me, I don't know what's the direction is gonna go, and that's fine to not know. As a trader, if you're not sure if the market is really highly sensitive, and you have traders coming up from both sides, and you don't know or not sure where it's gonna go, well, the bad thing you can do is just don't trade. Stay out. After it's like right now we are like facing a big storm which is coming up tomorrow. So if you don't know how large the storm gonna be, or if you're not prepared enough, if you're not sure you can sail through it, then just don't sail. Don't go on the sea. Stay in the harbor, wait for the storm pass. Then you can go out. Will be much easier to trade afterward. And if you have to trade, if you want to trade, then my suggestion is take smaller risk capital. That's the first thing. Definitely take smaller risk, and then tighten your stop loss faster, and then just aiming to make some small profit. Okay, and that was my mistake today, which I will tell you later on, because I did not follow my own preach. So I actually got stop out, which I should have just get out and make some profit. So let's go over currency first. In tomorrow, the euro dollar right now is still negative because the easing environment, but euro will most likely be a counterparty for US dollar tomorrow. So euro itself is not important. There is no fundamental data gonna drive it. Tomorrow, what happened to euro is that if dollar is weakened, euro is gonna go up. If dollar is strong, the euro is going to go weak. So that's pretty much your game plan for euro dollar. It's just use it as a counterparty for US dollar. So if the Federal Reserve, again, if they raise the rate, if they don't raise the rate, either way, you're pretty much gonna see US dollar drop, and that's why you can actually place a pending order to buy euro dollar if that's a risk you want to take, or you can simply stay out and wait for the events. For British pound, the CPI data of course helped the pound today, but everything is very short-lived, and that's the reason, because not only the market is heightened sensitive right now, you also have a Bank of England meeting this week. So of course, people are not going to place too much money. They are not going to hold the rate too long ahead of the meeting, and that was my mistake, which I actually got in euro pound. So after the British pound CPI data was a positive result for British pound, and we have these large, as you guys can see, these large bearish candlesticks, and that was a great, at a great area. So I just got in at the low here, put my stop loss just slightly above this 100-day, 110-day EMA, and my game plan was to ride it, because I still have a lot of daily range to go. So I put my entry was here. That was my entry, and that was my initial stop loss. So I was hoping to at least ride it all the way down to 83, and then I can either profit or get out, or just move to break even. But so I have to leave after the I had to leave after the London session. So I just tighten my stop loss here. So that's what I do. I tighten it here, and unfortunately it reversed during the New York session and stopped us out, and now it's slightly still edging higher. So what's the reason? Well, it's really not much reason. It's just people profit taking it, because London trader most likely profit take it, and then they just left for the day. And nobody likes to hold British pound or any position overnight, basically ahead of the central bank decision. So although I did one thing right, which is tighten my stop loss, so I only got stop out very small loss. But if I was smart enough, I should have just get out, or I should have just at least stay to break even. Now the reason I don't want to stay to break even, because I don't want this kind of movement to stop me out and continue to go lower. And that's where really the art comes in trading, is where do you adjust your stop loss, or where do you, because again, when you first enter a trade, it's very straightforward. You either get profit or you got stop out. But the hardest part is the management. When are you gonna get out? When are you gonna tighten your stop loss? When are you gonna move to break even? And that's really has a lot to do with your personality, a lot to do with your psychology, because people have different perception for profit, right? You might make one-on-one and be happy. Some people might not be happy. You might get stop out only to see that the trade goes in your direction, and then you find yourself kicking yourself. Things like that only have to experience by yourself psychologically. Then you will figure out exactly what works for you. So for me, tighten the stop loss is always a very good thing for me to do. I don't like to move to break even too fast, because more often than that you get stop out and it goes to your direction. So I generally like to give it more room. But in this case, I forget to take a consideration of the overall market. If I take a consideration of the overall market, then I would have known that, British pound, people will not hold it overnight, will not hold it after London session, because the Bank of England is going to have the rate decision. So I should have just take my profit. I mean, of course, it's a small profit, 20-30 pips, but I end up losing 20-30 pips. So it's just, you could have made 20 pips and you end up losing 20 pips. Not a big deal, but it's just, for me, it's an analyze things. I know I'm now looking back logically that was the right move, but if I don't do it, sometimes I do find it's kind of annoying, because it's just, oh man, I should have done that. How come I was not thinking about that? And that's really sometimes, sometimes it's psychology. Sometimes you're tired. If you are trading 8 hours, you're tired at the end of the day. And what happened when you're tired is that you're not that sharp anymore. Your decision muscle are not that sharp or in tune. So that's why for myself, I tend to not place new trade at the end of the session, because I know I'm not that accurate. And that's the same thing. You see a lot of trader who was doing very well when they were young, in the younger days, and then something happened in their life, they start making mistakes or after mistakes and eventually go busted. And that sometimes it just surprised me when you see people who are so sharp. Man, that's why, as a trader in this game, really you have to take care of yourself. Beside trading, take care of yourself psychologically, take care of yourself health-wise, have a proper diet, have an exercise, because really your decision is what makes you money. It's not your strategy that you follow blindly. It's not, you just follow any other trade. It's really your decision, and that decision muscle is very important. So anyway, that's what happened to me. I should have get out, I didn't, and got stop out, and now still aging higher. So that's my loss for today, and let's keep going. That was British pound. So sorry, let's take a look what happened to pound other trade. So pound yen, you see exactly same thing. You have a higher trade after the CPI data, and then all the gain has given back. What about pound Swiss? Same thing. It's even worse, because all the gain are given back and you're actually aging lower right now. So that's what happened to a British pound today. For US dollar, again, everything is strong fundamentally, but because the Federal Reserve meeting, I will really suggest you to either stay out or move your stop loss to break even before the meeting tomorrow. And at the meeting, if you want to trade with it, I'm just telling you that the probability is that the US dollar is most likely going to be sold at the initial result. And the reason is because if the rate is hike, it's already priced in, so people are going to take profit. If the rate is not hike, then that's a negative surprise, then people are going to sell US dollar. So US dollar is going to be sold regardless. However, that's just for the initial reaction. After an hour or two, after the press conference, then we will know exactly, we will know more hint of what's going to happen in 2017. So that's my suggestion to you. If you're not sure, don't trade or stay out. For Australia and New Zealand dollar, both are still fundamentally strong, especially the Australian dollar is really benefit largely from the Chinese data. As you remember, the GDP data was not good, was very negative actually last week. But regardless, as long as the China is doing well, it's going to support Australia. And they are pretty much going to be stronger currency tomorrow, more than US dollar. Now the reason is because, as mentioned, US dollar, if it's going to be sold regardless. Now, people are going to find a counterparty, and they are most likely to buy Australian dollar and New Zealand dollar because they are really relatively safe, they're relatively strong, they're relatively high yield. So we're most likely going to see Australian New Zealand dollar continue to be strong after the Federal Reserve meeting. Only if that after the meeting, if the Federal Reserve give a lot of positive hints after the conference, then you're going to see US dollar continue to gain strength. Then that's probably the moment you should get out of Australian and New Zealand dollar trade. For Japanese yen and Swiss franc, they both are still weak fundamentally, but because they are the largest counterparty, especially dollar yen for US dollar, so don't be surprised to see a lot of buying power into Japanese yen tomorrow at the meeting. So again, in this kind of meeting, all the fundamental is really disregarded, at least for the initial couple hours. So you can, of course, buy Japanese yen versus US dollar if you choose to do so at the meeting tomorrow. Canadian dollar still sentimentally strong due to the oil market. But as mentioned, if you look at oil market, still in this kind of indecisive movement, trying to edge higher but fail. So that's really, again, people's inconfidence toward oil market. You can still buy Canadian dollar because the general direction is going up, but really buy at a deep. That's the best suggestion I have for you. So currently, the trade call again is exactly the same, and I know it sounds really boring, but that's just the way it is in the market. We don't have any news, we don't have any new data. Everybody's waiting for the meeting. So right now, if you want to trade, again, trade with the sentiment. And my suggestion is play with small capital, tighten your stop loss ASAP, and it's best to move everything to break even or just get out before tomorrow's meeting. So right now I'm in all these trades: Aussie Swiss, Aussie Yen, CAD Swiss, CAD Yen, New Zealand, Dollar Swiss, and Dollar Yen. I'm still in all these trades. Some of them I got in at breakout, some of them I got in at retracement. I'll tell you exactly how I trade later on. I was in UZ Swiss, but I got out at break even. I'm short Euro Aussie, Euro CAD, Euro Dollar. So basically I'm short Euro. I was in Euro Pound, but got stopped out with small loss. I just mentioned that to you. So how I trade, it's very simple. Again, I keep mentioning you have different strategy you can use, and I know that technical strategy is really where your personality kicks in, right? Because fundamentally, sentimentally, we all have the same view. It's really nothing you can bend with this fundamental analysis. It's just a fact. But technical analysis is where you can play around, because whether you want to counter trade, whether you want to reversal, whether you want to trade breakout, that's really depend on your personality. So there's just really two ways to trade for me personally. I make it very simple. But there's only two ways. You either are trend followers or you are reversal trader. So again, you are either trend followers or you are reversal trader. So for me, it's whenever I first have a clear fundamental view, then I go to hourly candle. And now, why do I choose hourly? Does it better than 4 hour or 30 minutes? Not really. It just works better for me. Again, that's just my personal. I like to trade hour because I can do other things and take a look at the chart every hour. And for me, that's a perfect time frame, because if I'm not trading, let's just say during the weekend, if I'm reading the books, then most likely I always read 45 minutes and take a break. If I go exercise, I always exercise 45 minutes and take a break. So everything I do, my concentration is really just 45 minutes. So for me, hourly chart is perfect because I can, take a look at the trade, enter my orders, and then just leave my trading desk and do other things for 45 minutes. And then I'll be back and take a look at the chart again. And that's the way I like to do it. It works really good for me to do hourly. So I do it as, if it's a trend trading, for example, New Zealand Swiss. This is the one I got stopped out at break even today. So very simple. Let me delete all these trade. So very simple. Fundamentally, I'm more bullish in New Zealand dollar versus Swiss franc. So what I'm doing is looking to write the trend. So I put down these trend lines and just follow the trend and enter at this kind of, engulfing candle. You can enter at this kind of harami. Really, how you enter is really up to you. But the point is, you know that you are doing a trend trading. So you are writing this up. Now, when I say reversal, that means that if you can either buy a breakout, like you buy at this green candle, and then you put your stop loss way below here, or you buy at reversal, which is you buy at the deep. And that's really the simple concept. So I either buy when I have this kind of green candle, I buy at the breakout. But again, as I mentioned in the last video, it's really no perfect way. If you buy at the breakout, the momentum is in your side, but you are getting in at a relatively bad price level. If you buy at a reversal, you are getting at a good price level, but the momentum is not in your side because you're buying against the short-term trend basically. And that's why really only picking the currency pair that you have a fundamental point of view in your side. So for example, New Zealand Swiss, what I do today is very simple. I just draw a very simple Fibonacci in the hourly chart, and that's it. And I say, okay, whenever it comes down to 76% in this 72 area, I'm going to buy it. And then when it comes to 61%, I'm going to add it. And then 50%, maybe I'm going to add it again. And you say, oh, are you just going to keep adding forever? No, I'm going to add it as long as the fundamental and sentimental is still in my side. And I'm going to get out either when the fundamental or sentimental shift, or I just got stop out at. And that's why I don't generally don't have a profit target, because for me to get out a trade that is still working fundamentally, it doesn't make sense. So I like to let the market stop me out. So most often than that, I use stop loss to get myself out. I tighten my stop loss. And you know that when you tighten your stop loss, eventually you will be in profit, but you keep tightening up and you will get stop out at the profit. So what happened today is I got in at this level at around here, you know, this kind of support resistance, and you can still draw the line. Again, this is just a zone, right? So it's just for you to get into this kind of just a reference. So I got in at this area because, you know, during the London session, because I'm still very confident toward New Zealand dollar, very negative toward Swiss franc. So I got in, and as you can see, it works in my direction. And then, you know, but of course we have a lot of relatively consolidation. So I got in here, I make some profit, I set my stop loss to break even. I'm hoping this thing will break out. I keep going higher, then I can use, you know, 161%, 131 or 240% Fibonacci to use it as either add-on or as a profit taking, things like that. But it does not work because we are in this very tight range market. So I got stop out at break even, and that's perfectly fine. But generally speaking, that is how I trade for this kind of environment. That's how I trade the reversal. So even though I say reversal, it does not mean I sell in this red candle, because I never go against the fundamental. So even though this red candle signal a little bit downward movement, I'm not going to sell New Zealand dollar versus Swiss franc. So for me, I'm actually, when I say reversal, that means I buy at the dip. I buy against the short-term trend, which is that providing the longer trend is still in my side. So that's what I mean reversal. I'm gonna show you how I trade breakout. So for example, New Zealand. So New Zealand, it's exactly the same thing. You know, what you can do is you can do the same thing, draw a Fibonacci line, and then maybe buy at, you know, 76%, 61%. As you can see, all these are pretty good support resistance zone. Or you can buy a breakout, and that's what I did today. I bought a breakout right here. So again, first thing first, fundamental is in your side. You see this kind of green candle, you buy at a pending order, and then you buy at a breakout. You see this green candle, you buy at a breakout. Actually, that's the one I got in. I got in here at a breakout. I was in a little bit profit, and now most likely back at this break even, a little bit drawdown. So again, how you're going to tighten your stop loss is the artistic part of trading, and I cannot really decide that for you. It's really up to you. For me personally, I tighten my stop loss. So this is my new stop loss, as you can see. But originally, my stop loss was not here. My stop loss was here originally. So I already tightened up. And what I put here, you can either put a recent swing low or the previous two recent swing low. So that's what I put. I put below this recent swing low. I see the trade moving in my direction. I tighten up. We're gonna see what happened later on. So that's really very simple. It's really I'm sure it's not the best strategy. So it's really best for you to develop your own strategy that makes sense to you. But as long as you're writing the fundamental, then how you gonna trade the technical is really it's really a personal choice. So for me personally, I use hourly candle. I either draw Fibonacci and buy at deep, or I don't draw Fibonacci, but I buy at a breakout. My stop loss is tend to be wide initially, and I tighten it up and write in a trade. That's what I did last week. Actually, I got a pretty good profit on Kaiyang last week. And last week, from the beginning of the week, December 5th, right here, I actually got in Kaiyang very early. So last week, that was my trade. I got in Kaiyang with stop loss, and I never get out. I just keep adding it every day. And at Friday, we actually took off. So I actually makes pretty good profit. I was risking, 0.2%. All these trade, as you see the intraday trade, I usually risk 0.2% per trade. And that's why you see me taking so many trades, but my overall risk is probably less than 1.5 or 2%. So that's what I did. I keep adding, and when we took off on Friday, actually makes quite good profit with the initial 0.2% only, so making about 1.5%. And that's really the powerful thing. And it's like basically you scale in, basically you ride in the train, and then you let the market stop you out. So that's what I did last week, and that's still what I'm doing this week. So the only difference is that this week is more risky just because tomorrow's event. So I'm trying to basically either get out or tighten my stop loss to break even before tomorrow's events. Okay, so let's again take a look at 28 currency pair right now. So for those of you who are not doing intraday trade, that's definitely fine, because daily trade is fantastic. It's really one of my favorite, and as I mentioned, the only reason I'm not doing it personally because it jeopardizes with my psychology. But if I'm traveling, which I love to do, if I'm traveling, I usually do daily trade. It's really the best feeling to do daily trade while you're traveling, because it's just such a good feeling. You're having fun going back to your hotel, and then take a look at the chart, take a look at the news once a day, and then just that the trade works for you. So Pangnuzi was our last week's trade, and I don't know if some of you are still in this trade, but as you can see, we're really not going anywhere. So really suggestion is probably just get out because of the meeting this week. Tomorrow, Federal Reserve, Thursday, Bank of England. So really the suggestion is just get out, or at least tighten your stop loss. This thing can still drop, definitely, especially upon the good news today. British pound has a great news because the CPI data, but you're not going anywhere. So if the market has a good news and it's not going anywhere, it's not going up, then most likely it's going to go down. So that's just a very simple logic. If facing with the good news, a currency is not going up, then most likely it wants to go down. And there's no reason. You don't need to know, why? Well, there's no reason. Just that's generally a trader's perception. And that's what happened if I show you the futures contract market. Is a lot of short sellers are still looking forward to sell British pound. It's like the market is really waiting for a good reason to sell British pound. So what happened in Thursday is that most likely they are not going to change the rate, but the statement might be very negative for British pound. That's where you're going to see British pound drop. So definitely, if you are more patient, if you are fine, if you have the stomach to tolerate it, you can still hold it. Just put a stop loss here or here at 1.7750. Really tight it up, make it very tight. And then tomorrow it might drop, and that's very, very possible. Or you might get stop out. That's just, a game of trading. All right, let's take a look at Euro. The Euro pound, again, really small movement today. But look at the candlestick, it looks like it's gonna go up, but we'll see what happens tomorrow. Euro Swiss, again, relatively indecisive movement. Euro dollar is still a very indecisive movement. Euro Aussie still in this range bound. Euro CAD still, everything is really not going anywhere right now. Euro yen, same thing. And again, that's just the nature of the market for this week. Pound Swiss, I apologize for this, all this line. Let me delete this then, but this just from my intraday trade. So Pound Swiss, again, we're not really going anywhere. Okay, let me show you again, because I think my line was a bit confusing. The Euro Pound, Euro Swiss, Euro Dollar. Okay, let me delete the line for you. The Euro Dollar, we're still in this range bound, not looking to going anywhere. Euro Aussie, again, let me delete the line. Euro Aussie, we are still in this range area, again, not going anywhere. Euro CAD, exactly, pretty much same thing, Euro CAD, we're still here. Euro New Z, we are again still in this area. And Euro Yen, Pound Swiss, Cable, and Pound Aussie. Look at the cable. Cable is actually very good. I mean, we have this tight triangle area, right? We really have this tight. It does look like it might go anywhere. Now I know in the classical textbook it's saying that it's a ascending triangle, but it really you don't really need to pay that much attention to the classical term of a technical pattern. It just understand that just means the price is consolidated. It's in a very tight range. It might breaks out. If it breaks out, it can go very far, but it can go either way. Okay, so just be careful. So Pound Aussie, Pound Aussie, same thing, very tight area. Pound CAD, Pound New Z, and Pound Yen. So really, again, not looking to take any daily trade before tomorrow's meeting. So that's why I just show you this as a reference. Swiss franc, Japanese yen, dollar Swiss. Again, it's not much going on here. Dollar Swiss, dollar CAD. Dollar CAD will continue to be under this 200-day EMA. And dollar yen, then dollar yen is still in a tight range area. And Aussie Swiss, again, Aussie Swiss, same thing as any other trade. Really, everything is really consolidation right now. Aussie dollar, consolidation. Aussie CAD, it's still in this tight range. Aussie New Z, still in the tight range here. Aussie New Z is really not going anywhere. We were in this trade like weeks in November, going up, going down, going up, going down, going up, going down. We are still above 1.03, still below 1.06, still within the 300 pips range. Aussie Yen looks like it's still in the range bound, but it does keep aging higher. CAD Swiss, again, the candlestick sales says that it's retracing, but look at that, it's a very small red candle. It just shows that it has more buying power into this than selling power. CAD yen, it's exactly the same thing. Your kangaroo tail did not work out. It was still in here. But again, everything is really highly disregarded prior to tomorrow's meeting. USD Swiss, USD Swiss, USD dollar. I apologize for that. USD dollar, USD CAD, and USD yen. So yeah, that's pretty much it. Again, I would not suggest you to initial any new trade for now. Wait for tomorrow, and we will have more clear direction in terms of not only the US dollar, in terms of the overall market, basically. So if you're not in trade, that's perfect. Don't trade blindly. Don't get in too much risk. If you want to trade, then I would really suggest you reduce your risk capital or tighten your stop loss as soon as possible. And then regardless, I would suggest you, if you can, watch the press conference tomorrow and also pull out a dollar chart. You will see a very interesting reaction as how the market reacts to a central bank policy. It's a very good lesson to learn, worthwhile to practice in that way. Okay, I hope this video helped, and if you have any question, feel free to let me know. Otherwise, I'll be back tomorrow with another daily analysis, and thank you very much for watching. I'll see you tomorrow. Thank you. Bye bye.